Hi, Jim Jordan here, and we're continuing our business planning session by kind of drilling down a little bit. Last video, we talked about having SMART goals, specific, measurable, achievable, relevant, time-bound. That's what SMART stands for. And we talked about having SMART goals. And in this video, we're going to drill down a little further into some of the specifics for a real estate salesperson in terms of what they need to do or what you need to do to set goals for yourself for 2019. So let's jump right into this. I've made a little chart here and already filled it out a little bit, but I'll use this to kind of illustrate what I'm talking about in terms of coming up with some numbers for yourself for 2019. So we have goals for 2019, and we're going to take a look, first of all, at our performance in 2018. So if you were a real estate agent last year, then you should have some numbers from 2018. So we're going to start out with income, our gross income. This is before expenses and all of that kind of stuff. This is just our gross income, what you earned in commission income last year. So let's say, just for sake of argument, that you earned $70,000 in gross commission income last year. Okay? And let's say that your average commission last year worked out to be 3%. Okay? And you had 31 sales last year. All right, if we do the math on that, it's going to come out that your average sale is around $150,000. Your average gross revenue is $4,500. If you split that 50-50 with your broker, now I realize some real estate agents are on a higher split. All of the real estate agents at Realty World Indy are on higher splits than 50-50. But just for sake of illustration, we're going to use a 50% split with your broker. It may not be that high, but we'll use that number, okay? Which means that each sale then was worth about $2,250 or half of the $4,500. Okay, so that's the revenue calculations or the number calculations for that on a per sale basis. And let's say last year you did 70% of your sales were listings and 30% were buyers. Okay, and you needed 10 contacts last year to book an appointment. Okay, so contacts needed to book an appointment, you needed 10 of those. And number of appointments needed for a sale. In other words, if you had 5 appointments, then you converted at least one of those into a sale. So that would be 5 there. So number of appointments needed for a sale, 5. And then your total appointments needed last year, if we do the math here, you would have needed 155 appointments. Hopefully you kept track of that. Which boils down to, if you divide that by 52 weeks, that boils down to 3 per week. Okay, 3 appointments a week. That's what got you to $70,000 in revenue last year. Okay, and that was 1,550 contacts, which is about 30 per week, 30 contacts a week that you needed to make in order to achieve that goal. All right, so now what we want to do is we want to take that and try to extrapolate that to 2019. What can we expect this coming year? So let's set a goal for ourselves, and let's say we made $70,000 last year. Maybe this year we'd like to make a 6-figure income, at least $100,000. And so that's our goal for 2019, $100,000. Okay? If our commission rate remains the same, in other words, we earn around 3% commission on our sales on average, and our average sale is $150,000, and that means we earn $4,500, and if our split's 50-50, that means each sale is worth $2,250 to us. So if we take this 100,000, divide it by the 2250, what we come up with is 45 sales. So in other words, in order to achieve $100,000 in revenue in 2019, we're going to need 45 sales. Now, if your commission split is better, then you need fewer sales to get to this number because you're going to make more on each sale. So just keep that in mind. You would use your actual commission split to come up with these numbers. I'm just using 50-50 split for illustration purposes. Okay, so we know now that we need 45 sales in order to get to our $100,000 in income. So how do we come up with a 45 sales? Now, one thing we might want to do is look at our listing to buyer ratio, and it might occur to us that, hey, listings are a lot less time consuming than buyers, where you have to drive around and meet them in houses and you have to show a lot of houses and things of that sort. So maybe you make the decision that for 2019 you want to increase this ratio of listings. In other words, you want more listings this year than you got last year, and you want to work with fewer buyers. Okay? So we might set a goal for ourselves of 80% listings, 20% buyers. This will come into play when we start developing our marketing plan, which is the subject of a future video. So you just kind of keep these in mind. These are goals that we're setting for ourselves for the coming year. All right, so contacts needed to book an appointment. Let's say that it still takes us 10 contacts to get one appointment, 10-to-1 ratio in terms of contacts needed to book appointments. And let's say we need 5 appointments still for a sale. Now, a couple things you can think about. If you improve your closing ratio, it could be that you need fewer than 5 appointments. You could reduce that down to 4 maybe. Okay? If you only need 4 appointments for a sale, that's going to change your numbers for the good. Same thing up here. If you need fewer contacts to book an appointment, then that's going to change your numbers dramatically, and it's going to help you get to your goal a lot easier. So as we go through our training sessions this year, we're going to talk about how to improve your ratios here of contacts to appointment and appointments for a sale, which are important to look at. But if we don't improve anything, if we just stay the same, 10, 5, okay, then we're going to need, in order to get to this number up here, we're going to need 225 appointments in 2019, 225 appointments. And that means we need 4 of them per week. So if we divide 225 by 52 weeks, then that's how many appointments that we're going to need per week in order to hit our goal, okay? And that means we need 2,250 contacts to book the appointments that we need, the 225 appointments. And that means we need 43 contacts a week. All right, so those are our numbers now looking into the coming year. And so our challenge is, where does the business come from to achieve these numbers, okay? Particularly these numbers down here, okay? So one of the things that we're going to want to look at in coming sessions is, where is our business coming from? Where are we going to get these 80% listings, okay? So 80% of these sales, okay, 45 sales, need to be listings. So where are we going to get those listings? And how are we going to get those listings? How are we going to market for them? How are we going to schedule appointments? Things of that sort. So that's part of what we need to do in coming sessions as we take a look at our marketing plan and, of course, our financial plan. So this is the beginning of our financial plan, because what we want to do is take a look at what our revenue is proposed to be for the year, and then we want to see what we're going to net for the year by deducting our expenses out of here, which we'll talk about in our next video. Thanks a lot for listening, and I hope you have a great day.